Hello and welcome to Market Trends number 4. We will start today by talking about GDP. GDP is calculated using a complicated system involving four main components: personal consumption expenditures, investments, government spending, and exports. Personal consumption expenditures is the largest part of GDP as it is 70% of the calculation. GDP's growth slowed in the first quarter to 2.2%, a significant decrease from 3% in the fourth quarter of 2011. The drop mainly decreased due to a drop in investments, which is most likely a cause of higher gas prices, fiscal restraint, and economic chaos within Europe. The graph shows that the American GDP has not been able to maintain significant growth over the past year. The GDP has been able to have high growth, followed by periods of low growth in the year, which is bad because it is very inconsistent. Although the economy is weakened by Europe, the American economy should be able to maintain moderate growth until mid-2013, when the GDP should rise to about 4%. Also, by 2015, the unemployment rate should finally reach 6%. The economy is basically stalling for the time being. However, it will eventually begin to grow, and the American economy will be strong once again. We will now begin to talk about Case-Shiller's Home Price Index. The index is calculated by observed changes in individual home prices, which are found by local deed recording offices throughout the country. Home prices in the fourth quarter of 2011 dropped 6.8%, a significant decrease for the index. Only the west-south-central area saw an increase in prices in the quarter. Home prices are nearing a bottom, which is both good and bad. It is bad because it shows the economic recovery has not fully taken place and people are losing money on the housing market. It is good because the economy will eventually start to increase, and a recovering national economy will not only reinvigorate the housing market demand by boosting sales, but it will also help to alleviate the default crisis while making it easier for some to acquire home loans. The graph shows that almost every single sector of the index featured a decrease in prices during the fourth quarter. Home prices are expected to continue decreasing throughout 2012 until the national economy can help the housing market recover and raise home prices. We will now begin to talk about the current account deficit of America. The current account deficit occurs when a country's total imports of goods, services, and transfers is greater than the country's total export of goods, services, and transfers. The current account deficit rose more than expected in the fourth quarter to $124.1 billion. A larger trade deficit and smaller surplus on income contributed to the raise. Driving the increase was a larger deficit for goods and services, which was only partially offset by an increase in the surplus on income. Fewer exports and more imports contributed to the increase in the goods deficit last quarter. Goods exports fell $2.3 billion to $380.4 billion, while goods imports rose $3.2 billion to $566.7 billion. The current account deficit is likely to widen a bit further this year as the deficit for goods and services grows. The rapid strengthening of the labor market ought to lift consumer spending and imports, while exports are expected to increase more modestly as a result of Europe's economic troubles and less expansion in China. The graph shows that although the current account has risen in the past few months, it also saw a significant decrease in the past and is relatively low for what it has been in the past. We will now talk about the US dollar. The US dollar is currently weak as compared to other currencies throughout the world. The exchange rate between the dollar and the euro is $1 US is equivalent to 0.78 euros, or 1 euro equivalent to $1.27. As seen on the graph, the dollar has been rising against the euro, and as the European economies remain in a type of chaos, the dollar will most likely continue to rise in the future. The exchange rate between the dollar and the Japanese yen is $1 US equivalent to 78.35 yen, and 100 yen is equivalent to $1.26. And this graph shows that the US has taken a slight dip to the yen as it has been rising over the past year.